Good morning, good afternoon, good evening, guys. Welcome back. Welcome back, me. Welcome back, you guys. Yes, we've just finished our road trip about 2 days ago, and we've got the rough course of our road trip here. It's missing a few destinations that are kind of passed through, like Te Anau, Wanaka, Nelson, Hamner, Christchurch, Timaru. And obviously they're all in and out bits for all the activities, but you can only do 10 destination stops, so I've drawn out the trip best I could. And yeah, so we started out in Dunedin, went all the way up to Milford, in Te Anau, got stuck there at night because of petrol problems, came all the way through to Queenstown, then Tekapo, then Wanaka, Franz Joseph, Westport, Kaitiritiri, Nelson, through Picton on the ferry to Wellington, stayed in Perumu, went up to Taupo and back, and then came all the way down here, stopped in Hamner and Kaikoura, stopped in Christchurch with some friends, then stopped in Timaru, and then came back home to Dunedin. So overall we did 4,647.4 kilometers all up, so an extra 1,000 and something on top of that, which is a pretty big feat. That's considering I didn't do any of the driving because I don't have my full license. My girlfriend did all of the driving, so she did upwards of 65-70 hours of driving all up over 5 weeks. So that's a good feat to achieve. Proud of her. But it was a main trip. We did heaps of things. In the future videos, I'll have like a photo slideshow, some videos, and show you guys what I've been up to. But on a more serious note, investments are going well. Tesla has skyrocketed while I was away due to the S&P 500 inclusion. Deliveries in China going well. Demand always been over supply by a mile. And things have been going well, apart from a few production shutdowns and whatnot. But yeah, that is the road trip journey, what I've been up to, and pretty much everywhere I went. And yeah, so we'll move on to the kind of stuff that you're here for, really. So I put some money on today to buy some Apple and some Tesla to try and get towards those goals that I set out in the last video. So every time I put money on now, I'm going to try to put 40% of it on Tesla and like 15% on Apple to try and hit those goals. I think I got the percentages roughly right on how much I plan to invest next year. But obviously things will change because Tesla is $200 a share, US dollars a share, more expensive than I last made that goals video, so that investment goal will now be a lot harder, and don't know if we'll get there, but things have been awesome. So I can't remember the exact numbers of when I made the video, but here's the returns anyway for our Sharesies portfolio. So we're up over $1,000, which is a 14.5% return. And you can see that over the 3 months, that grey line is just flat, so I did not touch it until here. We'll go over the 1 month, just a flat line until we put in about $120 today. Yeah, so at the start of the road trip, which was that day, but I didn't touch it until, well, from this day, so we had $612 of gains. So over the course of just capital gains and dividends, we made over $450 just doing absolutely nothing, guys. So that is actually just amazing. Making $450 while on the way. Unrealized gains and just through dividends. And that's just the power of investing, really. It's just your bank's not going to pay you that much percentage on your interest. So like banks are like 0.5%, and it's just ridiculous. But yeah, so we'll just do a slight scroll through all our investments, showing the performance, how they've been going, and then we'll go onto the spreadsheet and show off the dividends and how they've been going. Yeah, so Triple M, our subscriber stock fund, subscriber stock has been going really well. I'll probably make another video on that to close off the year, and then start making more videos on that challenge, but making them a bit more inclusive, so getting you guys to guess the dividends I'll receive each month, guessing the portfolio value at the end of each month, and giving a shout out to whoever wins that. So I'll start that up next year. as a more inclusive way to get you guys involved in the channel and the journey. Apple's been going really well. I think they recently released news on increasing their iPhone production like 30% in 2021. AT&T's been all over the place with their streaming service and theatre inclusions and whatnot. Chorus dropped like, I don't know, like 25-30%, and I don't know why yet. Haven't caught up on the news, so if people know why it dropped from $9 to 7.6, that'd be sweet as to know, because I've done a little bit of searching on the NZX website, looking at announcements and just trying to find what fundamentally changed about the company so much to have it drop, or if it's just a normal thing that happens at the same point every year or something. Just a little out of the loop on that. Coca-Cola's been performing really well, same with Colgate. Contact Energy still on those highs for earlier in the year. Fisher & Paykel been kind of dropping a bit. I think that was a dividend. Yes, we got a dividend, put that in, and that market buy of 5 cents was a dividend from a company I no longer have. So I put it into Fisher & Paykel, wanting to buy more of that from the dip. 3 cheeky monthly, like 10% yielding dividend stocks have just gone up heaps, so that's kind of cool, knowing that they give me a monthly dividend of like 60 New Zealand cents for only having that much in it. And then they've also gone up at least 10% each, is just quite fun, really. Hallenstein's performing super duper well. We've kept buying that with our dividends and everything. I think on the 7th of December again, or the 4th, that was another dividend off another company or something that stacked up, so we put money into there. We got our 27.46 dividend from them as well, so we put that back in today. And that's our biggest dividend yet, 27.46. So once we go on the spreadsheet, you'll see how massive that's changed our graphs and everything. The dividend was a bit smaller than I was expecting, because I think that imputation credit's bigger than it was meant to be, or the resident withholding tax is bigger than I suspected or something, because I expected to receive more, but I might get that back at the end of the financial year. I can't remember, but I think I've been taxed too high on it or something. But that's cool to receive $30. That's like 2 hours work after tax and KiwiSaver, so that's just free money right there. It's sick. S&P 500's been performing really well. We'll start putting money into there maybe. Depends how our investment thesis changes, because I'm looking at more targeting the stocks that I think are going to perform really well, like my Tesla, like my Apple, like my Hallensteins. I want to pick those companies and focus on them mainly. Johnson & Johnson coasting along as usual, same with the property group. Main Freight been absolutely pummeling it. I plan to buy more of them, and that's kind of a speculation play in a way. So during my road trip driving around the whole country, just saw Main Freight trucks everywhere, multiple, like tens of them in the different cities, just everywhere, and I was just like, if that's not a good sign to buy Main Freight, I don't know what is. And that's just kind of a fun consumer play. McDonald's breaking even. Meridian Energy just absolutely pumped it up. Got to figure out why they've gone up so much as well. Just got to get back into the loop of things and reflect on what's changed. Microsoft, Nvidia, and that, just keeping it quiet. Same with Procter, just not much is happening. Realty Income, not much is happening. NZX just been slowly chugging up, which is sick to see a 29% return. Pepsi at 5. All our ETFs performing well. The bonds one dropping off a bit. Just as it does, just drops, and we'll probably be buying more of it now with that drop, to be fair. And yeah, we got Spark going down a little bit as well, similar to the Chorus. Our Somerset has been performing absolutely mean, probably buying more of that. So with the $50, I'll put into 5 different New Zealand stocks, $10 each. Like I said earlier, we got our 40% of our deposit kind of going into whatever to go into Tesla, and then 15% roughly to go into Apple. So I think I did like 50 New Zealand dollars out of 120, and then like 20 into Apple New Zealand dollars. So that's sick. So on here I've got a 50% return on my investment in Tesla, and then on Hatch, which I haven't pre-logged, so I'll just leave it as it is. I think I've got 103% return on that, 1,000 and something dollars. So we've made it big on our Tesla, and like I said, we can't keep planning on increasing that as Tesla just keeps leading in innovation and production of electric vehicles and solar panels and batteries and everything. Trust Power has been just bouncing up and down all over the place while I've been away, apparently. We expect a decent dividend from them, I think. Yeah, $3.78 coming in. Then we've got our monthly bonds, which is just flat. Just, well, not too flat if you look closely, but just been pretty flat. Yeah, just bringing in a monthly dividend to like 20 cents, which is mean. These are performing pretty well. Just bit flat as well. Then we've got our Walt Disney, which absolutely skyrocketed due to their streaming news. I think they got like 87 million subscribers on their streaming platform, which is much more than expected, and I think they probably might even get 90, maybe even 100 million by the end of the year, depending on how they promote it. And that's just huge for the growth of the company, and I think the CEO expects to be able to get 240 million easily by 2024, I think he said. And that's just huge. That'll make them the biggest platform, unless Netflix, HBO Max and all the other competitors do growth strategies as well and actually pump up their user base. Westpac has gone up a decent amount. They announced a dividend, which I hopped on as well, and they've just been sitting up there, so I think I'm expecting like $5, yeah, $4.50. I bought into these guys and made it a big position just to move money out of my really bad interest rate bank accounts and put it into here, because it's just, you make more. You do have the risk of the stock price being really poor, as Westpac's looks really poor. I don't know what happened here. I think that probably was COVID. It just happened a lot earlier than all the other stocks. It was kind of a month-long drop into the 23rd of March, which is like the bottom for most stocks. So that one happened a lot earlier. People saw that one coming a lot easier than all the other stocks. The stock performance overall, if you ignore that drop, has kind of just been going down slowly. So I don't know how long I'll hold this position, and if banks are even going to be relevant too long in the future with cryptocurrency and other fintech companies coming into play. But we'll see how that goes. It's been performing well, and it's given us a good dividend. And yeah, so that's just everything in a nutshell that's been happening. We've got our value of $8,400, $1,000 of gains, and it's just looking super sweet. A lot better than I expected, and that is sick. So we'll pop in that $10 everywhere I wanted to put it. So I think main freight was one of them. We'll put that $10 away. Get the password down in. And yeah, so let me know in the comment section below if any of you guys have gone on a summer trip so far, especially any of you students using that break, or if you've just been working, picking fruit, going into your supermarket jobs. Like, what have you guys been doing while I've been away? Just been investing as well, just finishing high school, finishing, I don't know, starting summer school soon. Just like, what have you guys been up to? And we'll get on to showing you guys the dividends very soon. So I think I wanted to put another 10 into Fisher and Paykel and Delegate, just to get those dividend growth stocks getting up there. And we're just doing the New Zealand stocks for today, and we'll do some American ones once we get some more cash flow coming in from work. And I think I wanted to do Chorus just as it has dropped heaps. Just don't know if the fundamentals have changed here, and really it looked like it was starting to maybe pump back up again off the drop. So I'll see if I can get a cheeky few percent gains on that $10 just as we play. I swear I just did Delegate. Did the pay already go through? I know, I just hadn't done Delegate yet. I thought it just went buy order when the markets closed, and I was like, that doesn't make sense. So yeah, that's our $50 going into our 5 different stocks: our Chorus, Delegate, Fisher and Paykel, Main Freight, and Somerset. And I think on our next top up, we'll put a little bit into the bonds as it's dropped a bit, and we want to see that go back up again, give us a cheeky dividend, and yeah. And as always, we'll be putting 40% into Tesla, 15% into Apple, roughly to hit those goals, get towards those big gains, hopefully. And yeah, so we'll move on to the spreadsheet and see what's happening. So a lot's changed. So obviously we have hit over $100 in dividends for the year 2020, and we've hit 117.08 overall, which is just a huge feat, crossing that 100 for the year. That's huge. So then we've got our invested, how much we've invested. That includes Hatch, and then we've got our value, which also includes Hatch, and then we've got our unrealized gains of 20.7% over kind of a year and a half, a little bit more than a year and a half. So that's just amazing returns to the average. Don't know if we'll be able to keep up those returns, but hopefully as we get more into Tesla and Apple, 3M, and all of our other growth stocks that we've got going, we'll see great returns as well, beating the average and hopefully not diminishing anything. We see our dividend yield as a really low number. This number I think will always be low, kind of because if I just invested a lump sum at the start of the year and didn't touch it, the yield would be better, but I'm investing money over time, so the dividends are smaller, but they're increasing over time, as you can see by this line. So we started off with a small portfolio there, and then we increased it by heaps by Q2, and then Q3 was somehow bigger with that Hallenstein's dividend happening there and not there, and then Q4 getting all the way up there as well. So I think this will always be a low number until we slow down to a more consistent deposits into the account, like $50 a week or something, because at the moment it's just bouncing around. Like sometimes I'll just go bang 300, sometimes I won't do it at all for a week, and then at one point when I was buying Tesla, it just went boom, $1,100 into it. So once we are more consistent in the future, not as impulsive, I guess, we'll see that dividend yield be a bit of a more reflective number of the portfolio. But then we've got our average for the 2020, for the month of 2020, the average dividends per month is an $8.50, which is mean as, because that covers the Sharesies fee just by itself. I won't use the dividends to pay for it, I'll use my own pocket, but it's just a cool kind of thing to give me a reference point of what I'm doing. And we have the just specific quarterly numbers there. Then we've got the monthly dividends for the year. So in November, while I was away, we earned $5, and then I think yesterday Hallenstein's paid us, or well today, and I got Fisher and Paykel today as well. So we've seen a few dividends coming in. I'll go to the list and show you guys, but we've seen roughly 38 dividends while I was away on the road trip, and that's just huge. Receiving money where you're not doing anything. The capital gains as well, like it's already, like say if I sold everything, it's already paid for most of the trip, which had skydiving, so much fuel and food and accommodation, like camping. Like it's pretty much already paid for it, and it's just cool to use as reference points, like what I'm doing. It gives me that freedom of mind to go and do things like that as well, and it's just cool to see. So we'll move on to the dividend graphs just to see the dividends per month, bouncing around on those high months, going up as always. So for the total dividends, which will always go up, of course, and the average dividends received also going up, heading past that $5 mark, I think. Yeah, and that's for the all 22 months I've been investing. So that's heading upwards of $5, which is sick. And then we've got all our dividends for all time coming in here, and see through November we got AT&T, monthly bonds, Apple, Colgate, Procter & Gamble, Realty Income Corp, another monthly one. Then our 3 cheeky monthlies coming in with big numbers. These are all in NZ dollars, by the way. I've already done the exchange just to keep it easy. We got a stock here that we sold a while back, giving us 40 cents. Trustpower actually already paid their dividend. Didn't mention that before. Then we got Visa and MasterCard coming with their tiny dividends, but sustainable. And they got the bond Johnson & Johnson giving us a cheeky one, Hallensteins and Fish and Paykel. And then I think we're expecting maybe another $10, $15, $20 in dividends for this month through Westpac. There's another big one I forgot about. There's Westpac. Trustpower's already been paid. Oh yeah, all the ETFs mid-December, so that'll be like $4, $3 per one of those. There's another bigger one coming, but I forgot what it was. But we should be seeing huge dividends, and it's just been amazing to see everything going on. Like while I've been away, I'd receive a dividend and go, let's put that back in, and then I wouldn't look at the stock market pretty much at all, and it was a good time to have a clear mind, and then come back and just reflect on everything that's happened, and it's been interesting. Like when I saw Tesla's stock price just go to the roof while I was away, like I left here and that last purchase went through at like $4.20, and then just seeing it go woo up to $630, $40. It's just now the stock's 50% more expensive to buy. So it's a bit of a bummer, but we'll keep investing into it. We see big things coming next year with the Cybertruck, the Tesla Semi, all the factories ramping up, and just seeing if demand still exceeds supply once everything starts ramping up, seeing how the battery cells improve, seeing if competitors make compelling products, produce enough for it to matter to Tesla. I think the stock price will react more than the company needs to. Like I think the company has an exceptional lead and will keep it. But it's just we've got to wait and see what's happening. So yeah, this is probably one of the longest videos that we'll have on the channel for a bit, just having a wee catch up on what's been happening. And yeah, so just leave a comment below how you been, got any questions for me, and yeah, we'll keep making some videos over the coming weeks because I'm working a bit, but I'll have free time here and there, and I'll just give some updates, refresh my goals for next year, look back on the goals for this year, set out the new investing challenge for next year, and just have maybe create an investment thesis on another one of my stocks, as the Tesla video performed quite well that made that on, and that was quite a simple video, didn't go too into the details, just gave a broad overview of why I invest in the stock. So we might do that, and we might do another cleanse of the portfolio as it's getting pretty tidy to what I want it to be. But there's a few holdings like Kiwi Property Group and maybe some of the Spark Chorus ones that I don't know if they still have their place here, just on the changing economy, and also with these ETFs covering lots of the New Zealand ones already. But we'll see what happens, and we'll keep it easy breezy. So yeah, happy investing guys, and I'll see you next time.